so very much, our Executive Secretary. Our keynote speaker, Dr. Abiodun Adedipe, Chief Consultant at B. Adedipe Associates, Treasurers of Nigeria, members of the Governing Council and Committee, the Executive Secretary of the Association of Corporate Treasurers of Nigeria, our esteemed members, other distinguished guests, gentlemen of the media, distinguished ladies and gentlemen. May I use this opportunity to wish you a happy new year and trusting that this year will birth great things for us and our dear nation, Nigeria. It is a great pleasure and privilege to welcome you all to the 2023 Economic Outlook webinar organized by our dear association, the Association of Corporate Treasurers of Nigeria, using this Zoom video conferencing platform. Thanks to COVID that has brought this new innovative and initiative. I welcome especially Dr. Abiodun Adedipe for accepting our invitation and agreeing to support this initiative as a keynote speaker. I am unequivocally pleased to welcome you to this seminar, to this webinar, the past president of our association, members of the Governing Council, as well as the diplomatic community and gentlemen of the press and our stakeholders. As you know and you are aware that we are leading in the advocacy as well as information to ensure that we do not leave you without adequate information as we start the year. The year is starting on a great note, and we are hopeful and filled with all form of anticipation and hope that the year will birth great things for us. In line with our mandate as ACTN, this 2023 Economic Outlook webinar, the 7th edition organized by us, has been designed to facilitate conversations and share perspective on the outlook for the Nigerian economy concerning the business community, as well as the financial markets, as we hope year 2023 would be. Additionally, we will, through this webinar, aim to enlighten the members of the business community on the key economic trend that we hope, that we see, that we forecast will happen. And we ask that you stay with us, that you attend our meetings, that you also partner with us at different levels. While I would not want to take so much of your time because I know that Dr. Abiodun Adedipe is loaded and would be giving us a lot of insight into the topic of today. So I would welcome you, distinguished ladies and gentlemen, to please listen, ask your question, and ensure that you pay adequate attention. On behalf of the Council and all members of the association, I express a profound appreciation to the resource person, Dr. Abiodun Adedipe, for honoring our invitation in spite of his tight schedule. I appreciate our esteemed attendees for their interest and participation in this webinar. I wish you all an enlightening and a very fruitful webinar once again. I say thank you for your time. And on behalf of the Association of Corporate Treasurers of Nigeria, I welcome you once, twice, and a million. Thank you.
Thank you very much, ma'am. I will now welcome Dr. Adedipe to come up with his keynote speech.
All right, thank you so very much, Shehu. Let me start on the note of appreciation to the President and Chairman of Council, Mrs. Victory Olumiyiwa, and the Council members, and indeed the Executive Secretary here, Shehu Akinfolari, for having me as keynote speaker at this event today. And also, as I always like to point out, I don't take it for granted or lightly because I believe there are so many professional economists out there who can do justice to this conversation. So being selected, I will share my perspective, as the President said, and then we can take the conversation thereafter. So I will share my slides, but after my engagement today, every attendee will have access to the document. So but I'll share them on the screen as I talk to the issues therein, starting from what is happening globally, and then coming back home to Nigeria before we take the outlook. So the premise on which I will begin this is to well, I will skip this because that's my profile summarized. But the premise simply is to put before us an understanding that the Nigerian business environment has very many challenges, which of course is what most analysts and speakers amplify. But also there are many opportunities. So in which case, my understanding of all this is that what we see and focus on is a choice. In which case it is possible to focus and see only the challenges and in the process get paralyzed. Alternatively, we can also look at the opportunities as well so that we can position ourselves on how to take advantage of such opportunities. So now, it's also important to point this out. I came across this in one of my newsletters I receive daily, and Ken Levitt said, we all make choices, but in the end, our choices make us. In which case, the choice I make of what to see and pay attention to will determine what I get at the end of the day. So essentially, this is what I put together in the last 1 week that the year started as what will dominate the business lexicon in 2023. And that is first and foremost, that we have uncertainty and complexity. We of course became used to that the very moment we came into the world of COVID-19 in 2020. And that was when we began to talk about the issue of moving from best practice to emerging practice to good practice and the rest of them. But the reality today, whichever business you are in and wherever you are in the world, is that there are threats from competitors. Can't escape that. It's getting tougher by the day. There are also problems in the supply chain that cuts across every industry, every sector. And of course, within that also, there are opportunities within the challenges, as I mentioned earlier. The second major plank to what every business person, professional, we have to talk about in 2023 are the global disruptions, and they are in 4 categories. The first is the Ukraine war, and it's very interesting because now we call it Ukraine war. We no longer refer to it as Russia-Ukrainian war. It's now Ukraine war, which of course evolved from some basic questions that in BA Council we asked when this, quote unquote invasion happened in February 2022. And we asked 3 questions, basically. First is, where is the war taking place? Second is, anywhere there is physical war, infrastructure and assets are being destroyed. Where is that happening? Mostly. Then the third one, lives are also being lost. Where exactly is that happening? So the description of it today is that it is the Ukrainian war, all right? Of course, the pandemic, we thought we had seen the end of it, but now it is coming back, which as of today, as of this morning, is a big issue in China, in mainland Europe, and also in the USA. Number 3, macroeconomic volatility is a global phenomenon. We'll see that shortly when I take a short summary of the global economic prospect that was published by the World Bank 2 days ago. And of course, societal divisiveness. I mean, just think about the, Capitol in the US within the last 1 week. To get a speaker elected, they went through so many cycles of voting. And the last time the US ever experienced that, to vote a speaker into office, was a century ago, just to illustrate society divisiveness. Before you even now come back home to Nigeria, look at what is happening within the political space. Then the third major issue will be pressure from stakeholders, your employees, your customers, your shareholders, and your boards. We'll talk about that later when I want to conclude. So what then are the global macroeconomic and social issues? What are they and what do they mean? Now, in this particular slide, we gave a summary of what transpired in the last 3 years. When we came to 2020, at the beginning like this, it was a very promising year. In fact, in a number of organizations, including churches, by the way, was invited to talk about the global economy and Nigerian economy in the next decade. That is looking at 2020 to 2030. So none of us expected that anything like COVID-19 becoming a pandemic. It was then, yes, in the news, began in China in 2019, December, which was where I got its appellation, COVID-19 from. So, but we never knew it was going to change our life completely, as it were. But of course, global economy contracted by 3.3% in 2020, dragged, of course, by COVID-19. Only few countries escaped that. Nigeria did not escape. Our economy also contracted by 1.92%. Okay, 2021, the global economy recovered very strongly, even though the growth was uneven. And in fact, with most emerging and developing economies, that's where Nigeria belongs to, recovering. Our economy also recovered. But then we look at 2022, where growth has decelerated somehow, okay? And now we are looking at it decelerating, going by IMF projections, 3.2% for this year. The World Bank just dampened that 2 days ago to 2.9%. And of course, this all coming from the very strong growth of 2021 that resulted from massive fiscal stimulus all around the world. And of course, accommodative monetary policy. The table you see on this slide, I just put it in this morning. And I put it out from the Global Economic Prospects issued for January 2023 by the World Bank, as I mentioned 2 days ago. Now, the entity, or let me say the nations and regions selected here are deliberate. Of course, the world, we are part of that. Then the advanced economies, okay, we normally expect that these ones will provide leadership in terms of lessons to learn, in terms of policy formulation, sequencing, execution, monitoring, and of course, extracting value. Emerging market and developing economies, Nigeria belongs there. Okay, what was the growth rate in 2021? What is the estimate for 2022? What is the forecast for 2023 and 2024? Then you come to China. China, of course, is the second largest economy in the world, depending on what you use. If you use PPP, China is the largest economy in the world, bigger than the US economy. But going by the common data that we all accept, China is number 2. The third one, of course, it means that you are looking at the US, you are looking at China, and then you now ask yourself, Europe, all right, which is the third in terms of if you take them as one single economy. So these three drive growth in the global economy. So that's why we pick China here. India here, of course, remember, you know, the BRICS, Brazil, Russia, India, and China. But more importantly, India is very interesting. Interesting because India today is growing very strongly. In fact, if you look at the charts outside of the aberration of Saudi Arabia, you know, in 2022 estimate, India is driving growth globally. In fact, projections for this year, next year, puts India at the top. But it is also interesting and, you know, instructive to know that the population of India will become the largest in the world, overtaking China by the mid of this year, 2023. But not only that, there's an interesting relationship there. The median age in China is 38 years. The median age in India is 28 years. So the Indian population is younger than the Chinese population. Then come back home, the median age in Nigeria is 18.1 years. So that is where what some of us see as prospects for Nigeria is coming from. Population is young, and of course, a lot of other positives that we'll talk about later that inform the outlook. Now, let's progress. What then are the major issues around the world? I will skip this slide because I've already talked to it, US economy, Chinese economy, and European economy. Now, these three, you know, drive the world economy. They are the largest three. But what is happening to China? What is happening to US economy? And then the Europeans, which in fact we broke down into the various components of it. Now, globally, the lingering Russia-Ukrainian war, of course, sanctions on Russia drove up global energy price, and of course, supply chain disruption, rising cost of doing business, shifting economic growth, and we saw, of course, increased global energy prices amid shortages trigger global inflationary pressures. The Chinese economy is slowing due to the zero COVID policy, which has been recently reversed, and of course, the soft real estate sector, which is a prime mover for the Chinese economy. Again, Chinese government also announced the policy to bring support to the real estate sector and therefore drive its economy on the growth path. Now, sovereign debt conundrum which is simply to say that, look, all around the world, it's not peculiar to Nigeria. Governments borrowed massively in order to combat COVID-19 in 2020. So a good number of them are still carrying that load as we speak. So if you look globally also at the data on global debt, it is growing faster than the growth rate of the GDP. And in fact, if you look at the debt GDP ratio globally, it is going to almost 300%. That is, global debt compared to global GDP is almost 3 times. Right now, stagflation is becoming a reality this year. We made a forecast of that at this time last year. And the reason was simple. Global economy grew strongly in 2021 on the back of fiscal stimulus, accommodative policy. And we said, this triggered inflation. There will come a time that growth, as you begin to roll back the accommodative policy, as central banks increase their policy rates, and at the same time, government stops, aggressive fiscal stimulus, that economies will slow down. And when economies slow down and inflation rate remains up and rising, they will likely find ourselves in stagflation. That has become now a reality for 2023. We see that also shortly. And of course, the strong US dollar at some point caused currency crisis in many countries. In fact, on the average, most currencies lost value against the US dollar by 20% in 2022. So of course, not all economies also can take advantage of weaker currency, as proven by British exporters in the past. This in fact played out in 2022. British exporters could not take advantage of a weaker pound sterling because that weakness of the pound sterling against the US dollar was not driven by the financial market. It was driven by fundamentals, just like the kind of problem we have in Nigeria. So, of course, their own we know is linked to Brexit and issues with mainland Europe that they divorced, from. Changing workplace dynamics and redefined employee expectations and wages restructuring. Property prices already falling in at least 9 rich countries. Okay, I've mentioned global debt there. You can see it here, and of course, African Continental Free Trade Agreement. Now, looking at the World Bank Global Economic Prospect issued 2 days ago, I picked this up from the executive summary, and it's instructive to mention that. And this is looking at what happened in 2022, and now looking forward to what will happen in 2023. Asset prices are being in broad synchronous decline around the world. Investment growth has weakened substantially. Housing markets in many countries are worsening rapidly. Following that, shock waves continue to emanate from the Russian Federation's invasion of Ukraine, especially in energy and other commodity markets. Now, against this backdrop, confidence has fallen precipitously. Now, for me, as a professional economist, this is the central issue when it comes to economic recession. Recession hangs all around confidence. The moment people lose confidence in what is happening in the economy and policy responses to those happenings, they are likely to engage in conduct that will inevitably drive the economy into recession. But the moment confidence restarts and is regained, that is when the economy begins to recover. So I can relate with what World Bank is saying here. The world's 3 major engines of growth, which I mentioned earlier on, the US, Euro area, and China, are undergoing a period of pronounced weakness. In fact, the US economy entered recession last year, but it didn't make it big news, all right? Because that economy recorded negative the first and second quarters of 2022, and then picked up in the 3rd quarter, all right? So now, this also, the World Bank sees is with adverse spillovers for emerging markets and developing economies. Remember, that's the group Nigeria belongs to, many of which are already struggling with weak domestic conditions, all right? So we put that on one side. So let's now come back home to Nigeria. Our economy, what has been the pattern? Latest available data on our GDP is for September 2022. Now, as I said earlier on, in 2020, our economy contracted because of the impact of COVID-19 and our response to it. It was lock down the economy And of course, we started with Lagos in particular. If you lock down Lagos, you have locked down commercial activities of almost 60% in Nigeria. All right, that is quite significant. So of course, the economy recovered in 2021, growing at 3.2%. Our own estimate in BA Consult is that the economy will grow by about 3.1% thereabout in 2022. Of course, we are waiting that data. We don't have that maybe February. Now, market dynamics, looking globally now at the economy, and we come to that in the next slide also. Market dynamics caused by the Ukraine war recently reversed Chinese zero COVID policy and recession prospects for a third of world economies tempered the oil market, with Nigeria's burning light trading at $79.78 per barrel yesterday evening. All right. But if you look at the chart to your right here, it shows how our economy has grown in the last 10 years. That is for the first quarter of 2013 up on the September 2022 official data available. The trend line shows that the economy is trending downwards. But what we also pick from here is that except for the recession of 2020, recession always is not sudden. It starts at a point in time. If you look at this chart clearly, recession in Nigeria began in 2014. The economy began to slow down in 2014, up on the 2015. And there's something that happened that time is what we are also going through right now. And I will put that very simply, oil theft, okay? As at 2014, oil theft in Nigeria was between 400 and 600,000 barrels per day. And I'm quoting our then petroleum minister, Diezani, Madueke, who granted an interview to Christian Amanpour on CNN. So I listened to the interview. That was just where she mentioned that figure. So in my mind, I recall that and then put it vis-a-vis what we're experiencing today, where you look at three things. What is our OPEC quota? What is our actual production level? And what was projected in our budget for 2022 as production level? When you look at those three, it shows clearly that there is massive oil theft, all right? So in which case, we were in a position 9 years ago, we returned there in as far as the oil and gas sector is concerned. So critical issue, looking at 2023, is how Nigeria will reverse that the same way we did in 2015, okay? This gives you also a particular picture that most analysts don't talk about. But this is quite important for us. And I'll put this in context of our population. Oftentimes people say, for me, erroneously, that we are too many in Nigeria. And for me, that is a misinterpretation of data and situations. And the reason is simply this. One thing that the Chinese have proven for the rest of us in the world is that population is not a burden. What becomes a burden is when a large percentage of your population is not economically active. In which case, what we want is a population that is economically active. Even though for economists, analysts like me, the first thing we look at is what is our GDP growth rate as compared to population growth rate. If you look at that, Nigeria doesn't have any problem there as at now, especially when you look at what has happened in the last, let me say the last 5 going to 6 years now, where our GDP, started growing at a rate closing up the gap with the population growth rate, and now exceeding that in 2021, maintaining it in 2022 until the third quarter of 2022. So, but it is important to also note that as we projected about 15 years ago when we did something for the presidency in BA Consult, that our population will become the 6th in the world this year, 2022. Last year, 2022. Of course, by UN estimate, Nigeria attained that position in July, with an estimated population of 216.7 million people, okay? We are the 6th most populated country in the world. And that population also has very interesting dynamics, and we'll talk about later. The one thing we take away from there is that when you have a large population that also has a huge appetite in terms of consumption, okay, Marginal propensity to consume in Nigeria is very high. And you take that, this average the number. What that means is business prospect. So in which case, what we should be thinking about is, where are these people? What is their age distribution? What is the profile in terms of education? What is the profile in terms of every other major metric that connects to productivity? So these are the things that any business person that wants to design corporate strategy should be looking at. Now, this particular chart, I developed this chart about 8-9 years ago, and that was to prove a point that the Nigerian economy is diversified and different than what most analysts were saying wrongly. But interestingly, our government has now accepted that officially, as announced by the finance minister only last week, Wednesday, when she was doing the public presentation of the detailed breakdown of this year's budget. She admitted that. And of course, for an obvious reason that I've been talking about over the years, I didn't generate this data. This data, as you can see here, is noted on the National Bureau of Statistics. They divide the economy into 43 sectors, which are aggregated into 19. Those 19 are what you see reflected in this chart. But pointing to you as an operator in the private sector, this is how I interpret this for you. I will pick out 6 sectors from here. Agriculture, as you see here, as of September last year, contributed 29.7% to our GDP in the third quarter of 2022. Mining and quarrying, 5.9%. Oil is a part of that, okay? It's a part of mining and quarrying. Manufacturing, 8.6%. That makes 3 of them. The fourth one, trade, was 15.3%. The fifth one, ICT, 15.3%. Real estate, 5.6%. Those 6 sectors of our economy, ladies and gentlemen, in the last 12 to 13 years, have jointly contributed between 77% and 82% of our GDP, which means those are the sectors where we are creating the most value domestically in the Nigerian economy. That's what it means. Now, going beyond that, when you look at our GDP growth rate for the first 3 quarters of 2022, the annualized average will come to 2.97%. That means if you take that as a straight line growth rate, or at 2.97%, that's what we get for 2022. But usually we make an adjustment for this, because fourth quarter in Nigeria historically is when our economy records the highest growth rate, unless thunder strikes, okay? So which means if you look at the historical pattern, looking at data from 1960 till date, all right, you find that fourth quarter is usually the quarter when our economy grew fastest. So if we factor that in, then we likely see a growth rate for the Nigerian economy for 2022 come to something around 3.1% thereabout, okay? Now, going further, and this is where we pick out the aberration in our economy to show that where the problem is in terms of diversification is not in the economy, it's in our external sector. If you look at our foreign trade figure, oil accounted for 79.1% for our trade between January and September 2022, official data, okay? But if you look at oil's contribution to our GDP, it also averaged 6.21% over the same period of time, which means where the problem is not in the diversification of the economy, as this chart demonstrates, but the problem is our dependence on hydrocarbons for our foreign earnings, which is why we put it here as external sector vulnerability. We can all relate with that here, especially those who are professional treasurers, which we talk about shortly, okay? Which connects to external reserves, foreign earnings, capital flows, and how all of those play out in the exchange rates, and then the response in terms of inflation rates, and of course, interest rates. We get to that shortly, okay? Now, coming to capacity to extinguish foreign obligations, we measure that capacity by looking at our external reserves. Now, our external reserves has 2 components, the blocked portion and then the liquid portion. At the close of 2022, the liquid portion of our external reserves was $36.048 billion US. Now, put that figure on one side and then look at our foreign trade data, which I made reference to shortly, a short while ago. When you look at that data for January to September 2022, aggregate it, then divide by 9, you will get a monthly average of 1.89 trillion naira. That means Nigeria between January and September last year, we spent 1.9 trillion naira every month paying for imports. Now, if we put that figure and the dollar equivalent of it at $4.36 billion against liquid external reserves, that gives us a cover of 8.26 months. When we measure the number of months cover of external reserves, the reference is not so much as we have to pay out all these obligations at once today. The idea is that it's a concept in economy that says, if for any strange reason, Nigeria doesn't export a single dollar of oil and non-oil products or services, okay, and we have to depend exclusively on what is in the pocket, like in liquid external reserves, how long will it take us compared to our monthly import bill? That is what this translates into. You again hear many analysts erroneously bring into the conversation all of future transactions, forward transactions. It is a dubious analysis because those transactions have their maturity dates. And that is when those obligations become due for, payment. So you can't bring them in. And the same thing goes when you look at Nigeria's sovereign debt. There is nowhere in the world that you look at sovereign debt and assume that the country is going to pay everything all at once. That's why some of us call it dubious analysis. Of course, dubious analysis is something that we are familiar with in the academia, in economics. So, but if you look at total reserves, as at the end of 2022, 37.08 billion, that is, add the block portion to it. If we compare that to where we were end of 2021, a year earlier, at 40.52%, $1 billion, that was 8.48% drop. That is not massive in terms of the drop. So in which case, if you look at this, there's no reason for us to worry at all about Nigeria's capacity to extinguish foreign obligations. Equally, I have slotted something in here, our terms of trade. As of September 2022, latest data available was 101.68%. What that means is that the value of our exports was greater than the value of our imports. So whichever way you look at it, terms of trade was still favorable to Nigeria as of September 2022. Now, capital importation, fortunately, we don't have more recent data than this for the National Bureau of Statistics. But what this also shows is that, yes, like is happening to most emerging market and developing economies, inflows, capital inflows collapsed right from the time of the pandemic up until date, and that has not fully recovered. So it's not peculiar to Nigeria, it's happening globally. But one interesting thing that makes us say that Nigeria remains attractive, an attractive investment destination, but not so attractive in light of security concerns, is because when you look at inflows, that is foreign inflows into Africa, Nigeria dominated that space as well. Nigeria topped the chart in Africa in terms of inflows. Despite that, inflows into Nigeria was very low. We are still top of the log as far as Africa is concerned. So which means there is something going for Nigeria that oftentimes analysts don't really see. You see that now shortly in my outlook. Then, of course, coming to exchange rates, and this is the one that will be of interest to most of us. Two things here. One is, what is the trend with exchange rates? We can see the pattern up to December 2022. But this, of course, talks to the official rate. Then on the right side is the chart that shows the premium. The exchange rate premium is the difference between the official rate and the roadside rate. I prefer to call it roadside rate. And it is really unfortunate, and I say that with every sense of responsibility, that World Bank is making reference to parallel market when it comes to looking at exchange rate in Nigeria, which in fact is a clear departure. I worked for the World Bank in 1989 as a full-time staff of the bank. It's a departure from what the bank is known for. So the parallel market is not the reference rate for the economy. And of course, as treasurers, we understand this very well. what we call in exchange rate economics is the difference between a thin market and a thick market and a shallow market and a deep market. What is happening here is that if you look at the official and the alternative market, the volume on the official platform is significantly higher than the volume in the other segments. In reality, okay? So the question then is, which rate should be referenced? Is it the rate at a thin market or the rate at a thick market? But that is an issue for discussion. The one thing is this: rising a high premium, as you see in the chart to the right, makes imperative, difficult choice of adjusting the official rate to close the gap. That is the typical IMF recipe, okay? And that is what they repeatedly banged the head of CBN governor about, that it should in fact eliminate premium. Again, I will take you back to history. If you look at the data on our exchange rate from 1970 till date, for every occasion we devalued the naira, which was erroneously done, we only made every corporate entity and every household poorer, because you have an economy that is largely import dependent. From the 1970s to the 80s and 90s, we used to be a net non-oil importer. That's where we describe the Nigerian economy. But from the late 1990s up until date, we became an importer of both non-oil and oil commodities. And so it now became an issue that every time you adjusted the official rate to eliminate premium, the alternative market rate will also move further. Because for the operator there, the logic is simple. If you are coming to buy dollar from me at the roadside, I make an assumption that it means you didn't have access to official dollar. So naturally, I will price higher. And if you look at the data, that is the pattern over the decades. So in which case, each time you devalue, that premium will creep back in. And so it becomes a perennial financial adjustment that you keep doing. So, but also in economics, and I'm sure for those who are economists on this platform and this discussion, you will understand this easily, and I want to make it very clear. Now, as a concept and a policy in economics, devaluation is designed to make your exports cheaper. That's the purpose. So in the economics of it, doesn't say you devalue to close the premium gap. What it says is to make your exports cheaper. Therefore, you'll be able to sell more to the rest of the world. And that is where Nigeria keeps getting it wrong. Because what we export mostly, as we saw in the data earlier, are hydrocarbons. That means crude oil, condensate, and associated gas. All right. Now, the volume of crude that you also export is not exclusive to you. It is subject to OPEC Plus allocation. It's no longer OPEC, but OPEC Plus. So if that is the case, it means whether you devalue the naira or not, it will not affect the volume of crude oil that you can export to the rest of the world. So, and that unfortunately accounts for almost 80% of your exports, as you saw earlier on in the data. So it then means that if you devalue your naira, the only thing you will get out of it is poorer companies, poorer households. And I can talk a lot about this, being involved in many cross-border transactions. There's a Ghanaian client of ours, a company that began operations in 1924. They came into Nigeria 3 years ago, then invited us to intervene in their corporate strategy. And so the issue when we went to Accra at the strategy session was, we invested in Nigeria. The money coming back to Ghana, we value in dollars. So if Naira keeps losing value, that means there has to be more pressure on that our company in Nigeria to generate more Naira revenue, so that when it is converted to dollar, it will reflect that we are making money from this investment decision. That's the way it goes. If you want to do any international transaction as a Nigerian entity, all they do is take the exchange value of the Naira, divide your balance sheet by that, and then they get the balance sheet footing that shows that your company is so small in size. All right. So the enduring solution to this is beyond evaluation and adjustment. It is about pragmatic measures to address structural deficiencies. I will talk about them shortly. And those things are actually happening currently within the Nigerian economy. Inflation rate is of interest to treasurers and, of course, anybody in business. Inflation spikes correlate with recessions of 2016 and 2020. I mean, that is quite obvious. If you look at this and look at the GDP chart I showed earlier on, there's a clear correlation between them. When we saw spikes in our inflation, that was also the period of recession of 2016 and 2020. Now, with inflation rate persistently trending upwards, the central bank had to raise the monetary policy rate, okay? But our economy is desperate for growth. And the real big issue in Nigeria's inflation rate is food inflation, which, as at the last figures of November 2022, was 24.13%. At the time, we're looking at inflation rate of 21.9%, which means the core inflation rate is less than what we see as the inflation rate for Nigeria, the composite rate, whereas the real driver, food inflation, is the big number there. So that means food security should come as a big issue in our economic agenda. And there are 4 elements in food security, but the primary ones are availability and affordability. In which case, how do we ensure that more food is available and also the food is affordable? The moment we can deal with that, then Nigeria's ranking at 107 in 2022 out of 113 countries in food security will improve, back and maybe beyond 97 that we are in 2021. Now, this is a summary, the stock market performance. Up until COVID-19, we used to, as professional economists, interpret the stock market as a leading economic indicator. But when the pandemic came, this particular thought, which had been in economic theory for decades, was now challenged, because we discovered that the stock market could be experiencing a boom at a time the economy is struggling, because it is all about a view, a perception about what will happen within the market itself. So, but if you look at the Nigerian bourse, it ranked among the global best performing in 3 years consecutively, 2020, 2021, 2022. In fact, up until the end of 2022, the index was up 19.98%, which means if you invested in a stock market in 2022, the rate of return you probably would make would be around 19.98%. That is the year-to-date return. Of course, market capitalization grew by 20.72%. But why this is important is because, as treasurers, we know that money market rates, especially physical securities, have risen and are drawing domestic investors away from the stock market, while foreign investors are still tentative as pre-election uncertainties continue. Now, going from there, I won't talk much about this because this just gives us an idea of what is happening in the crude oil space. You will see that when you get a copy of this. But this is the summary of the challenges and risk in the environment that will now lead us to talking about the outlook. Macroeconomic concerns, we just went through them: interest, exchange rate, inflation, employment rates. The major reference to deepening poverty, purchasing power is weak, population growth rate is there, unemployment rate, out-of-school children, insecurity is causing costly logistics, creating distribution constraints, and also bringing constraints to investment opportunities. Poor infrastructure, which of course is also improving, is affecting cost of doing business, and of course, to some extent, is also a disincentive to the inflows of FDI. Future of work and technology, inefficient governance, and of course, uncompetitive wage. Which is why, for example, UK is making effort recently, but just December 2022, to lure teachers from Nigeria to UK to come and teach in their own country. And of course, I will leave that because that's another big issue, right? In terms of international competitiveness and the narrative that the educational system in Nigeria is bad. And yet they all come here to take products of that system into their own very system. Constrained fiscal space, no revenue base, unsustainable borrowing, energy and climate change, green energy transition, climate change adaptation. Only this morning before we started this conversation, I got a report. The United Nations says the ozone layer, the way we are now globally pursuing green energy and climate change, addressing climate change, that the ozone layer that was being depleted will likely close back by year 2066. That report I got only this morning before I joined this platform. So coming now finally to the outlook, what are the likelihoods and what are the expectations? Now, I picked this up from the World Bank Global Economic Prospects that I said earlier on was issued 2 days ago. And this is what they wrote. Our latest forecasts indicate for 2023, sharp, long-lasting slowdown, with the global economy declining by 1.7% this year. And that is from the 3% they projected 6 months ago. The deterioration is broad-based in virtually all regions of the world. Per capita income growth will be slower than it was during the decade before COVID-19. The setback to global prosperity will likely persist. By the end of next year, GDP levels in EMDEs, Nigeria belongs to that category, will be about 6% below the level expected on the eve of the pandemic. Median income levels, moreover, are being eroded significantly by inflation, currency depreciation, and underinvestment in people and the private sector. So what this means simply, ladies and gentlemen, is that the problem of inflation, currency, depreciation, and underinvestment is global. So that when we are interpreting this in terms of Nigeria, we don't go overboard and think the problem is only here. They're looking more at how should our own entities respond to all of this. Now, the World Bank in the report says their projections for this year, especially with respect to Nigeria, what they expect is on the background of 5 elements. And then the forecast is based on 4 things. The 5 elements that are the underlying coming from 2022, rising production costs, that of course relates to inflation rates, underperforming oil and gas sector. Of course, that again reflects the fact that that sector is shrinking, not only because of oil theft, but because of insecurity as well. Okay. For example, Shell just brought back about 500,000 barrels per day in the last 10 weeks thereabout, which of course has boosted Nigeria's output beyond in fact what the World Bank indicated in this report. Of course, insecurity, we are all aware of that. There are floods that ravaged most of Nigeria. Of course, again, that is a global phenomenon driven by climate change. So then is all of this underscored, of course, by policy uncertainty. That's the position of the World Bank. And they now said the expectation for 2023 is based on restrained growth of the oil and gas sector, in which case they made the point in that document that the oil sector in Nigeria did not get sufficient investment in 2022. And they also made reference to poor funding of joint venture, activities, which of course, in my own view, is incorrect. All right. Secondly, they said agric growth this year will soften. That's the word they used. All right. And they based that on the fact of flooding last year. But again, for me, that disregards the fact that when there's a flood, there's also a period of time that the flood recedes and then people return to their farms and their houses. And then also most of the staple foods in Nigeria that we consume, the gestation period is not up to 1 year. Some have only 3 months, some have 5 or 6 months. So their own projection that I agree with Softy, I don't fully agree with, coming to 2023. Then, of course, persistent fuel and FX shortages. Yes, I agree with that to some extent, but they also, again, disregard the fact that there are at least 3 refineries that will kick into operation in Nigeria, new ones that will kick into operation in Nigeria this year. One of them is the largest single train refinery in the world, not in Africa. Largest single train in the world, that is the Dangote refinery. Now, equally, NNPC has invested in those 3 refineries, so it's a shareholder there. Apart from the fact that they gave an indication that first quarter of this year, Port Harcourt refinery will start producing, maybe at least skeleton. Then, of course, they mentioned weak fiscal position, which, of course, I have an observation on in my next slide. Now, what most analysts ignore when they interpret the fiscal space in Nigeria is the tax for road swaps Dangote constructed in Lagos the longest concrete road in Africa. All right. But that came on the policy, they said presidential, order 007 that brought up this policy, which means that you have your tax obligations computed, verified, then you have a particular road or a number of roads that you obtain bill of quantities from construction companies. Then you match those two and come to the government that they should give you that road to construct. You see your own tax obligation. And then they verify your bill of quantities and everything, and you sign the agreement, and then you go to work. Now, when you do that, it means that by the time you deliver it, that is when government will take that into account. So when you look at the revenue today, ladies and gentlemen, and that is where many of us are misinterpreting what is happening. Now, when it comes to revenue expenditure nexus, many of us don't capture the revenue that ordinarily would have been in the box if those companies paid the taxes. But instead of paying the taxes, those taxes are going into capital projects. Dangote is doing that, MTN is doing that, a couple of other companies. NMPC is taking 1,874 roads. Okay. There's also improving infrastructure in Nigeria. The roads, rail, and the rail now runs in 3 corridors. Aviation, major airports have new terminal buildings. Then what most people are not even aware of, we call them inland container depots, that is dry ports. Our company has been involved with the one in Abia State since May 2005. And of course, one of my friends also the one that owned the one in Kano. And we also have equally, a relationship with the one in Bauchi. So all of these are part of the infrastructure renewal going on in Nigeria. So when people say infrastructure in Nigeria, we have massive deficit. The question I ask is, if you look back at where we were, in fact, for me as an analyst, I look back at 2011, when First Bank commissioned me to do a review of infrastructure in Nigeria, we serviced 10 other countries among the next 11. Okay, the next 11 were identified by, in 2005 by, Goldman Sachs. Okay, Shehu, your hand is up. Shehu, your hand is up.
This is why, sir.
All right, thank you. Now, when we looked at that, when I looked at that in 2011, First Bank actually published the research report. Now, Nigeria was the last among the 11. Whereas today, Nigeria is no longer the laggard among the 11 countries. We have moved significantly in different areas that we measure. I will come to a few of them when I conclude shortly. So when you look at revenue expenditure nexus, but you ignore the tax for road swaps, that means your figures are incomplete on the one hand. When you also look at revenue and obligations nexus relationship, the same way, unfortunately, even government doesn't see this. Otherwise, they should be putting this before our faces. But for me, as an analyst, I see this as an important thing. Now, there's also expanding domestic production capacity. This, of course, are things being also pointed out by foreign analysts and researchers. Refined petroleum products, like I said earlier on, rice, a major staple. Nigeria has the largest rice processing plant in Africa, in Ikorodu in Lagos State, all right, that has become operational. Now, not only that, we're also the largest producer of paddy rice in Africa. We overtook Egypt 4 years ago. That was in 2019. Okay, up on the 2018, Egypt was #1 in Africa. But of course, for obvious reasons, because of their own domestic problem. Egypt had power problem. And so their government rolled out a policy that said water from the Nile River should not be used to irrigate rice farms. That the primary need of water is to generate power. So by constraining water allocation for irrigation of rice farms, they now fell behind Nigerians who are ramping up production of rice in Nigeria. Okay. Also consumable that I mentioned earlier with relative to inflation rate, food products and domestic items. Then automobiles, ladies and gentlemen. Nigeria also is doing very well expanding capacity in that. There are at least up to 7 automobile manufacturers in Nigeria that are selling to African countries. But hardly will you get that in the media in terms of reporting. Okay. Of course, they probably will make reference to what happened between Innocent Motors and Sierra Leone recently, where Innocent supplied military vehicles to Sierra Leone, and they were the one that even made the noise, not even Nigeria here. The Sierra Leoneans that made the noise globally, that they are so excited that a company in Africa can produce top quality vehicles for their military use in Sierra Leone. So, and of course, you see Proforce and the rest of them all over the place. Okay. Now, I'm saying all this because I see this as additional notes that are often ignored when people make outlook. Equally, the Stanbic IBTC does a monthly purchasing managers index from a survey of 400 companies in 5 sectors. And anytime PMI is above 50%, 50, it means there's improved business condition. Whenever it is below 50, it means business condition is deteriorating. Ladies and gentlemen, in the last 25 months, the PMI constructed by Stanbic has been above 50. And in fact, the one in December 2022 is the 8-month high that we have had in Nigeria. Okay. So, of course, staffing levels also increased for the 23rd month running. And that was the fastest in August 2022. Okay. Purchase cost, of course, rose sharply because of FX rate. Those are the findings of the report. So they do this every month. So if this gives a view of what to expect, because usually we take PMI as a half-year indication of what to expect. So the PMI we have there, therefore, for December 2022 points out to the fact that we expect the economy to expand over the next 6 months, because these are real orders placed by purchasing managers. It is based on those orders that this index is constructed. So this gives us a view as to what to expect for the first 6 months of this year. And by the way, Dangote Refinery by June, early July should be in full operation and delivering refined petroleum products. I'm aware personally, because of some relationship with the group, that as of November 2022, Dangote Refinery was conducting the last check on the complex, and that is hydraulic test. That was the final check of a refinery before it begins operations. So if I go to check today, for example, I probably will find that they started producing. I know for sure that within that complex, the petrochemical complex, that Dangote had been exporting fertilizer as far back as September 2021, not 2022, 2021 September. We've been exporting fertilizer from Dangote complex there, okay, to Brazil and a couple of other countries in Europe. This is this year's budget summarized. I took this from a friend who did this fantastic graphics illustration of the budget for this year. So you can see the summary here, and there are 4 key things to take. One is total revenue expected. What are the dominant contributors? You see one factor here, which the finance minister just mentioned last week, that for them, they now see that the economy is diversified because in the last 5 years, according to the minister, that the Nigerian economy had been mostly driven by non-oil sector. That's what made them to now accept the argument I've been making the last 11 years, that our economy is diversified. Let's focus on where the problem is so that we know how to address it. Expenditure, we can see there, okay, major item is recurrent non-debt, 8.33 trillion. Of course, recurrent debt, 6.31 trillion. Capital is a little more than that, 6.46. And then you have sinking fund and starting transfers. Then you come to, if there's a deficit of 11.34 trillion naira in that budget, that is greater than revenue, okay? That's what we make noise about. But in economics, you don't make noise about the fact that you are borrowing. The question we ask as professional economists is, what are you borrowing for? So that we know whether to tell you that your borrowing is unproductive or it is productive, okay? If the borrowing is to fund consumption, then we say you are in trouble. Now, I sat on the Presidential Committee in 2010 that looked at federal government expenditure. So for me, therefore, in that context, what I will pick out is, what is the relationship between our non-oil revenue, that is take out oil revenue and aggregate all these other elements? How do they compare to our recurrent expenditure? Because that was the major recommendation we made to President Jonathan in 2011 March, when we submitted our report. inaugurated the committee October 2010. Then we finished our report and delivered March 2011. Now, when you look at this data, what it tells you is that all our non-revenue projected for this year is less. Do I say it is less? We're 10.49 minus 2.29. That's 8.2. Indeed, 8.2 non-revenue is less than required expenditure. So what we recommended there for Nigeria was that we should work out a situation where non-revenue is exactly equal to recurrent spending. Until we achieve that, our fiscal operations won't be viable. All right. So, and that is what we see here. I won't say more than that for you because it's just to give us a view about the budget. How do they intend to finance this deficit? 5 different sources. But which ones are the major ones? Domestic borrowing, foreign borrowing, and multilateral, bilateral project borrowing. Now, for me, the bulk of borrowing is from domestic sources, okay? So that means it is internal. And what does this mean also for the economy? It means whatever federal government will pay out to service those borrowed monies locally will stay within the economy. It's not going out. That's one. People often ignore that as well. But the one I will complain about as an economist is if the bulk of this is coming from the central bank as waste and means advances, which oftentimes is what we call hot money. So that will be the one of concern to me. I will then say, okay, why should we borrow from the central bank? Why not borrow from the capital market? All right, because that will be subjected to more discipline. And of course, it will require you to make sufficient provisions in terms of extinguishing the obligations when they mature, and also, of course, ensuring that you service on an ongoing basis. Now, what is our outlook in BA Consult for this year? We expect Nigeria's economy to grow in 2023. For us, it will be a slight improvement over our expected 3.19% for 2022. You recall I mentioned earlier on, if you analyze our growth rate for January to September, you will get 2.97%, assuming we run at the same rate in the last quarter of 2022. But like I said, historically, our economy normally ran faster than, in the fourth quarter than the preceding 3 quarters. So if we factor that in, then our expectation is beyond 2.97%. So we put it at 3.19% for 2022. That, of course, will be confirmed when the MBS brings out the data for our GDP for the fourth quarter. So what do we expect for 2022? This is where we depart from what the outlook of the World Bank is. And what we have done also historically is that we do our own outlook in January, we revise it in July. IMF does the same thing. They do October, they do January, they revise in April, and then they revise in July, and then October. All right? What we have seen in the last 7 to 8 years is that oftentimes when they do their own outlook review in April and July, they often come very close to what we have projected at the beginning of the year. And I always say this with every sense of responsibility. We are Nigerians. We do business here. We understand the system a lot better than someone that comes on a visit 2 or 3 times in a year to ask questions and interact with people. And of course, because I understand also the way they come up with their projections, that is why we have a different approach, which looks at many things they usually ignore. What do we expect about inflation rate? This is not peculiar to us anyway. It's expected to moderate, but it will still be double digit. And why is that so? Any economic growing, you can't escape inflationary pressures. And that is where we think we have been getting it wrong, thinking that we can grow our economy and then bring inflation down to single digit. Things don't work in that way. If you want growth, you can't escape some measure of inflation. So but we expect it to dampen to less than 20% in 2023. Lending rate will remain double digit and keep responding to the rate of inflation, which means there's always that relationship between the real interest rates, which captures inflation, and interest rates. We also expect this year accelerated manufacturing. That, of course, doesn't rely only on what we had mentioned earlier on the Stanbic IBTC PMI publications, but also based on what we have observed happening in Nigeria The only thing for me as a Nigerian on the petroleum front now is that the new manufacturing in Nigeria that is growing rapidly is Chinese and Indian. Not so many Nigerians are involved in that. That's the new manufacturing that is accelerating. And why is that so? Because they see the market, large population, high propensity to consume, willingness to spend. Our saving rate is very low relative to other countries, around the world. So equally, we expect that the government coming in will do what they call focused export promotion. And that will bring some measure of stability to the Naira exchange rate. Official rate we expect will likely go to 480. Initially, we're looking at 510, but again, we looked at what may likely play out. And where did this come from? We looked at the manifesto of the 3 leading presidential candidates, which of course will be a subject we are taking further next week at different fora. And we looked at them and said, number 1, the 3 of them are business friendly. Number 2, what are they all saying about the defects in the structure of our economy? And if they have to go the way they have indicated, then we see a likelihood that not only will manufacturing accelerate, but there will be also focus on export promotion. So we see roadside rates improving to 705 Naira to the dollar. Of course, improvement in infrastructure, we believe will begin to impact positively, the cost of doing business, which is part of why we see inflation dropping from above 20 to below 20%. Intensified digitization, and of course, ascendancy of the digital economy. This is my final note, and this is the positive that I want us to pay attention to. As I said earlier on, our population, we are the 6th most populated country in the world, median age 18.1 years. So what does that mean for your business? Then secondly, urbanization. Nigeria is among the top 10 countries with rapid urbanization. We moved from 47.84% in 2015 to 51.96% in 2020. Today, 2023, beginning, it has intensified further. It's just that I don't have the data yet. That's why I didn't put it here. But going by insecurity and the influx of people to Lagos especially, and other urban areas, certainly urbanization has progressed beyond 52% that we make reference to here. There's also deepening internet penetration. This, of course, became accentuated during the pandemic in response to it in 2020, where we now found that we began to encourage companies and organizations generally to adopt the strategy we describe in BA Consult as end-to-end digitization. But how has that played out? Nigeria is, with internet penetration of 51% in January 2022, that was a year ago, also ranked us as number 8 in the world in terms of global internet users. But there's a peculiarity to access to internet and usage by Nigerians. Over 90% of Nigerians with access to the internet do that on their mobile phones. So that gives you also another perspective to the market. Beyond that, tele-density, I checked this out this morning before we started, 114.7% as of November 2022. That means how many active telephone lines vis-a-vis our population. Again, of course, the strengthening innovation culture driven largely by the survivor instinct. Of course, our payments infrastructure, volume and value are strongly evolving. And this, of course, is being intensified by the redesign of the Naira and the direction the central bank is pushing for cashless Nigeria. I served, I would say I was supported to serve as the chairman of the committee that reviewed cashless Lagos in 2014. So I understand fully the dynamics of this and also being involved in coming up with the idea of e-Naira. And in fact, did a review of that for Central Bank just November 2022. So I can appreciate what is happening with respect to payments. Of course, it means for your organization in particular, you must begin to pay more attention to competitive strategy. So finally, in closing, and I pick this from a statement credited to Nelson Mandela, it is in the character of growth that we learn from both pleasant and unpleasant experiences. In which case, what are we learning from what is pleasant about this environment we operate in? What are we learning from what is unpleasant about our experience in Nigeria. How do we grow in spite of both experiences? So thank you very much, ladies and gentlemen. We can now engage in questions, comments, and conversations. Thank you.
Thank you very much, Dr. Adedigbe. This is inspiring. To our members, we are waiting for your questions. Mr. Dike signifies that he has a question, so I'm going to allow Mr. Dike to talk and ask his questions directly. So, Mr. Dike, you can talk now.
Yeah. Thank you, Dr. Adedigbe. Your presentation, as usual, is classic. But I have a question.
Yes.
You say that you have studied government borrowing in Nigeria, and as an economist, borrowing is not a bad thing. But whether we are borrowing for production or consumption, I want to ask you, because you have studied this topic and investigated it, what is your finding? Is Nigeria actually borrowing for consumption or production?
Very good question. Now, when you interrogate what we borrowed for, you find that there are two components. There are borrowings for projects, and there's also borrowing for consumption. When we say borrowing for consumption, that means what I showed you earlier on is simply to take your recurrent expenditure, okay, relate that to your revenue on the one hand. That gives you an idea of the ratio between recurrent spending and total revenue. That's to start with. But as an oil producing country, we also take your recurrent expenditure and compare with your non-oil revenue. All right. So when we do that, we get an idea where your problem is coming from. And if you go and research the concept in economics that we call the Dutch disease, the Dutch disease simply says that the bulk of your revenue is coming from one source, that's high vulnerability. But unfortunately, on the other hand, you are not spending that money wisely. That's a simple description of the Dutch disease without going to the technicalities of it. So then, some of us, when we came together to look at that for Nigeria, we said, was there any time the Dutch were in the same problem Nigeria currently is in? And ladies and gentlemen, we discovered indeed it was the same problem the Dutch had. We then followed by saying, what did they do to get out of the problem? That's where what I mentioned earlier came from. That you need to work over a defined number of years to make equal your recurrent expenditure and your non-oil revenue. So that way you free oil revenue for capital spending, productive, and also for investment, which is what a number of oil producing companies have done over the years. All right. So now that's on one side. When you look at Nigeria, a lot of our borrowings actually deliver the railway system. All right. A lot of our borrowings deliver the aviation terminals in our major airports. A lot of our borrowings delivered the roads, borrowings domestically and foreign, deliver the roads. So, and I always want us, when we analyze economic issues, to be dispassionate and look at issues from that perspective. So it is an erroneous view to say that Nigeria is borrowing for consumption. That doesn't stand anywhere because the projects are there. It's a space that we interrogate. All we now keep doing is encouraging government to develop the courage to deal with the cost of governance. And there are also existing recommendations anyway. For example, in the Orosanye report that we'll be repeatedly talking about, all right? And what the committee I served on also did in 2011. A whole lot of recommendations are there. If we take those, they will address cost of governance and thereby impact your recurrent spending and also bring you to a point where you won't need to borrow for consumption. That's the way it goes. But in reality, not all our borrowings went for consumption. A lot of it went for projects.
Thank you.
Thank you. Okay.
Thank you very much, sir. So, Mr. Afis Adebimpe, please, can I ask your question?
Hello?
Hello?
Can you hear me?
Yes, we can hear you.
Okay, good afternoon, sir.
Good
Yeah,
afternoon.
thank you for your discussion. It's quite intriguing. I have 4 questions for you, sir.
Yes, sir.
The first question is on the budget deficit. You said one of the source of closing the deficit is by borrowing locally, and he said that is good for the country, that because the interest will be paid locally, which also benefit us as a country. So, but I'm also looking at it from this angle, the crowding out effect of domestic borrowing, where the private individuals or companies are being crowded out of the borrowing in the financial sector by the government, because since the government is paying higher and it's default free, so the banks are willing to pay, lend to the government rather than individuals or corporate entities. That's one. Number 2 is on inflation. So many Nigerians still believe that our inflation is not caused by, it's not a demand pull inflation, rather it's a cost push inflation. And the government is placing more emphasis on the demand pull side, that because there's less demand, there's more demand, and that is why the cost of commodities are increasing. And that's why the CBN has continued to increase the interest rate to reduce the level of money in circulation. So I really want you to up on that. Then thirdly, it's on borrowing. On the borrowing, do you think borrowing to build infrastructure that are not income generating is good for us? Because I believe those infrastructures should be generating income to service those debts. But most of the things, the project the government has borrowed money on are not income generating. How do you see the sustainability or the repayment of those loans, to the lenders? And lastly, it's what's your view on the sustainability of the RT200 in the drive for exports? Do you think this CBN's policy on RT200 is sustainable in the long run? So these are my questions, sir.
Okay, thank you so very much. These are all fantastic questions. I mean, obviously, from a solid professional. The first one, budget deficit, borrowing locally, we have a crowding out effect. Yes, I would say that is the textbook interpretation of domestic borrowing. But in reality, what we do is we look at actual transactions happening, and we look at entities that have capacity to borrow from the market. And then we ask ourselves, how many of those entities that have capacity to borrow from the market actually were unable to borrow because the lenders prefer to lend to government rather than those entities? Or in fact, their instruments are coming out more expensive because of the rate charged to, on government instruments. If you look at Nigeria, that's why we say that there are a lot of aberrations in Nigeria. That's where many of us make the mistake in interpretation. Now, what happens in the global space with what we call relationship between economic variables doesn't exactly play out like that here in Nigeria. Interestingly, this phenomenon is also happening in the big economies, and it began with the global financial crisis of 2008 to 2010. In fact, in 2011 specifically, the Treasury Secretary of the US put out a statement that policy responses by the Treasury and the Fed can no longer follow textbook patterns, but they will now have to become pragmatic. And I remember putting that before our own central bank and the presidency in Nigeria at the time. So being pragmatic means the peculiar situation in your own jurisdiction to determine what to do rather than what it says in textbook economics. For example, we knew that the typical economic cycle will run for 6 years when you have a boom before recession sets in. That particular concept in economics became unraveled completely during the time of Bill Clinton as president of the US. That's when we began to interrogate that all over again, because during this entire 8 years in office, the US economy consistently grew. So in which case, that expectation that boom of 6 years will immediately trigger recession did not play out. So we began to look at that again. And we also saw that now boom also may not even last as long as 6 years. In fact, as we speak today, I don't know whether you have come across this indication that the next pandemic, ladies and gentlemen, is expected in 2025. That's in another 2 years. I don't know whether you have come across that publication. Okay. What does that mean to you and I? It means the idea that a pandemic will happen once in a century. The last one before this one we had was 1918 to 1920. This one came in 2020. So that's like a century apart. But now we are looking at possibility of another pandemic in 2025, just 2 years down the line. So the issue for me is that, yes, crowding out effect is an argument we make when we do a theoretical analysis. But in Nigeria, it doesn't play out that way. So, and the reality, you know, I also play this joke of bankers. I mean, I'm an ex-banker and I still consult in banking, okay? I always play this out on the bankers. I say, look, you are the ones that we say that government is borrowing too much. Yet you are the one making money from government borrowing. When government issues short-term debt instruments, what we call fixed income securities, when they issue them, you are the one that invests mostly in them. So whatever is the, you know, fallout in terms of payment the government will make also still comes to you. So for me, we may not see that much of a crowding out effect, as we have said. In fact, this very morning, one of the major companies in Nigeria is issuing ACP for 100 billion naira. And I don't see that as an issue reflecting, you know, crowding out, so to say. The second argument, I agree with you 100%. Inflation in Nigeria is cost push, like I said, largely food inflation. When food inflation is only at 24.13%, vis-a-vis your inflation rate of 21.9%, that should tell you clearly that it is cost that is pushing that. Apart from that, there's also the cost of doing business, which was escalated also by insecurity, okay? So, and I agree with you 100%, like I said. Over the years, I've made the argument, if you interrogate the data, at least the ones available for 1970 till date, there's a very poor and weak correlation between monetary policy rate that we used to refer to as, you know, monetary discount rate, MRR, that between then and now, there's been a weak correlation between inflation rate and monetary policy rate, which means tinkering with MPR will not make any much impact on the rate of inflation, because what is affecting us mostly are rigidities, which are what they call structural deficiencies. Then in terms of borrowing for infrastructure, yes. Now, the challenge with Nigeria, and I think I mentioned this in a conversation some 2 days ago, that the incoming government must find the courage to address this issue. I read in the news, you know, some stakeholders saying that the second Niger bridge, which is being delivered now, should not be told. And I just smiled and said, where is that done anywhere in the world? Where you deliver an infrastructure that costs so much money and people say it should not be told. The way it is done everywhere, including China, ladies and gentlemen, because I researched China in 2008 when we were working on infrastructure in Nigeria and gave that as a policy free of charge to Yar'Adua's government in 2008. Now, many roads in China are tolled. The same thing everywhere. You see, a road or an infrastructure, if our infrastructure is in three plans, there is economic infrastructure, there is social infrastructure, all right? And of course, what we call others. The social infrastructure are the ones you cannot charge revenue generating tolls on. But where it is economic in nature, you need to charge tolls. In which case, if you don't want to pay tolls, go to the old Niger Bridge, just to use that to illustrate. If you want to get to where you are going in good time and therefore enhance your productivity, pay the toll on the new bridge. Just like we had the Lekki Expressway here in Lagos, at the toll gate. When you pass through the toll gate, you pay toll. If you don't want to pay toll, you take the alternative route. It's also available. So but if you go to alternative route, you might encounter some traffic. So you ask yourself, is it worth it in terms of time? What is the implication of that for my productivity? Just like the stupid thing most Nigerians do. When they hear a rumor that the price of refined petroleum products is going to be increased, they go to the petrol station and queue up. I asked one man one day, I said, look, when you join the queue, you spend 3 hours to fill your tank, isn't it? He said, yes. I said, okay, let's even assume that your tank is empty. How many liters can it take? 65 liters. Good. Now, what is the current price? It tells me, I said, multiply that by 65. So that's how much you fill your tank with. Where do you expect the price to go? where maybe the price you go to so and so, okay, multiply again with 65. What the difference in terms of naira and kobo? Is that difference worth your 3 hours? The man just immediately entered his car and left the petrol station. So now the idea is that we don't rationalize things. If we do, then we should have the courage to put tolls on some infrastructure in order to recover the cost and repay the loans taken on them. That is the way to go when you borrow for economic infrastructure. But when you do social, that relates to education and health. That one is social, all right? Then the last one, sustainability. Well, the RT200 drive for exports for me is just one of the destinations for ensuring that we not only encourage export, but ensure that that also, is added to whatever you can generate by mobilizing Nigerians to bring back what they earn offshore. And this again, the naira for dollar, incentive came from one of my, researches that I made available to them at CBN. And that was a study done by Bloomberg in February 2021. Okay. And I showed the CBN that, look, 5 countries were outstanding when it came to migration. Beneficiaries, mostly US and Canada at that time. Beneficiaries in terms of remittances, Nigeria topped the chart, followed by Pakistan and Vietnam. And I said, how come officially we record only $22 billion annually? Whereas for my own estimate, I got a figure of $32 to $34 billion annually. So that means between $10 and $12 billion annually of remittances don't return to Nigeria. They're outside there. Okay. So how then do we come up with a policy environment that will make those monies come back here? That led to the 5 naira, for $1, repatriated. Okay. Of course, I was also involved in the e-naira, as I said earlier on. So the whole idea is simply here. We did some work for one of the former finance ministers of Nigeria, which is to be published shortly. And that is where we identified how will we take advantage of the African Continental Free Trade Agreement. Very simple strategic thought. I said, look at all African countries. What are their top 20 imports? So those top 20 imports, where are they imported from? What are the quality specifications? What can Nigeria do to outcompete the countries where those African countries import from? So take those top 20 and develop strategies for outcompeting those people within Africa. Because producing here in Nigeria, sending to them no duties, is open borders within Africa. If that is the case, then we already have an advantage. So we must tie that to what they are importing. And so if we are driving for export, yes, the idea of RT200 is good because CBN is saying we are providing funding for those that want to produce for export purposes. That is fantastic. That will drive export, no doubt. But that process must now be strategic. And that is what we add to it. So the effect of this will depend on how strategic we are in implementing this. But thank you so very much. Those are 4 fantastic questions, like I said. So I'm here for as long as ACTN wants us to continue. Okay.
Thank you very much, sir.
Over to you.
We appreciate it. We appreciate that. So, Mr. Funsho-Shobade, wants to ask the question.
Okay. We can take comments as well, please.
All right, sir.
Thank you very much. Thank you very much, Dr. Adedipe. It's always very nice to hear you speak. And I like the fact that most of the time you speak, using your research-based and things you can actually back up with statistics. So you always give a good balance between the so-called dubious and sensational economists. And that's why I would like to listen to you. I've listened through this whole presentation and I have a few comments and perhaps a teaser for you at the end of the day. So, when I looked at the concerns for the macroeconomy, I didn't seem to see something I thought would feature, which is some concern about whether or not we are over-leveraged as a country. Because when you look at the presentation by the finance minister last week, and they always cite, the IMF global standard as indices, saying that, there should be, for most countries, the limit is set at 55% debt to GDP. Internally, Nigeria had set its own level at 40%, and we're currently at 35.5%. So I look at that and I said, look, isn't that any cause for concern? And I didn't seem to see that when you were in your wrap-up slide when you had the macro concerns. So I just wanted to understand a bit more about that. And then secondly, for how long will this so-called traditional response to inflation by central banks, by raising interest rates, it gets to a point where it is, especially as you have pointed out, that this is a global phenomenon. It starts off in the US or wherever. By the time it goes around the globe and hits us, we're chasing a moving target that can only be addressed to a particular level by traditional response. Then the teaser I have for you, and you may choose to answer this or not, but tomorrow, if you had to prioritize 4 major actions that we would take to put this country to start to turn it around, where would you say, or what sort of action points would you have, if you are limited to just 4 things that could be done in the immediate to start to turn the fortunes of the country? Thank you, sir.
Excellent. Thank you so very much. This, the first one relates to our sovereign debt position. At 35%, very close to the threshold of 40% we set for ourselves. Well, that looks at one particular metric, and that is sovereign debt vis-a-vis GDP, okay? As I showed in one of my slides, that in fact is a phenomenon that has gone completely, many countries are no longer looking at that. And I will give you an illustration here, and you can fact check this. On the 10th of June, year 2020, the UK government borrowed so much to fight COVID-19 that the sovereign debt position of UK returned to where they were in 1963. And that was where sovereign debt was greater than GDP. So the ratio for UK became greater than 100%. This thing we are talking about here. On the 10th of June, 2020, you can fact check that, okay? It was a Saturday. So at that point in time, nobody was talking about borrowing or not. It's about borrowing for what? So, and that is my own position, with respect to this. And I happen to be one of those that encourage Buhari's government to borrow for projects, because I've been in this kind of conversation for long. I recall vividly in 2004, our external reserve was so strong. I advised Obasanjo's government to take whatever we had above 20 months coverage, because our external reserve was greater than 20 months cover. We needed only 6 months cover. We had about 22 at the time. And I said, any extra above 20, government should invest in infrastructure. And then the World Bank issued a statement to advise Obasanjo's government not to try it, that if he invested in infrastructure, that will trigger inflation. I remember doing a memorandum on that is a misadvice for the Bretton Woods institution. I mean, I worked there before, like I said. So, of course, we've had many other issues like that, okay, over the years. For me, the more important question is, what are we borrowing for? Just relating to the last question, raised, that if we borrow to deliver infrastructure projects that impact productivity positively. In fact, that was what the small group I belong to, gave to Yar'Adua in 2008. That I said we branded as Infrastructure Nigeria. And we said, model China. So that what some of us envisioned way back in 1990 March, when we discussed this issue in Paris, will become a reality for Nigeria. The conference we had in Paris, March 1990, was how Africa will become the manufacturing ground for the world. China had not attained that. but China used infrastructure to become that as of today. Okay, so what we said to Yar'Adua then is that let's create rail corridor 3x1 minimum. Let's also do expressways that will connect north and south, east and west in Nigeria. China did it as 8x4 of expressway and 4x4 of railway. But for each of them, they had a target country they were competing with. They saw themselves, we must deliver 85,000 kilometers of expressway in China within 30 years. They launched it in 2004. The idea was for them to have a longer stretch of expressway than the US that had 75,000 kilometers at the time. Then they looked at Russia. Russia was the #1 country in the world in terms of railway stretch. And they said, want to build railway tracks in China that will give us number of kilometers longer than that of Russia. Target date for completion, 2012. Okay. And then they talked about inland container depots, that is dry ports, which is what I mentioned in passing earlier for Nigeria. I've been a part of that now for close to 20 years in Nigeria. But how many have we delivered? They're still there. Okay. So we said, if China did this, we can do the same. Do Lagos to Kaduna, to Kano. It passes to Kaduna. Do Port Harcourt to Maiduguri. They both meet in Kaduna. Then do Kaduna down to Warri. That will give us 3 from the north to the south. Do one that takes off from Ibadan on the Lagos-Kano line that goes through Ilesha, Akure, then, of course, Ondo, then Benin, then Onitsha, then Enugu. Enugu is on the Port Harcourt-Maiduguri line. So in which case, we'd have done 3x1 for Nigeria. That was the concept. Which is what Buhari's government is borrowing money to do right now, ladies and gentlemen. So that's why for me, you can now see where I'm coming from, talking about borrowing and for what. Okay. So because I've been a part of this for almost 20 years now, in what Nigeria should be doing as a priority. Then, of course, if you look at, well, okay, let me take the issue of traditional MPR response. I agree with you 100%, and I've been saying that repeatedly. Whoever is at CBN, I've interacted with different governors of CBN. At this policy level, let me say at least from 2002, November, with the old Baba Sanusi, whom I asked this question that you asked today, because they invited me to do a paper for Central Bank on policy advice. Which one should they focus on? Exchange rate, interest rate, inflation rate. And I told them at the time, given the reality of Nigeria's economy and its structure, CBN should pay more attention to exchange rates, because any movement in exchange rate affects every other price in the system. That was November 2002. Okay. Over the years, of course, after him came in Soludo, after Soludo came in Sanusi, Emefiele, and each of them repeatedly have told them that, look, applying the traditional MPR response to inflation rates will not be effective, because research shows that very clearly. Less than 10% correlation between MPR movement and inflation rate movement in Nigeria. So how can you tell me that that rate movement or tinkering will impact this? As you rightly said, as a professional treasurer, as I see you, now there is quantitative easing, which normally is introduced when interest rates has become ineffective. You also get to a point, quantitative easing becomes completely useless as a tool. And then you embark on negative interest rates as a policy, okay? And then from negative interest rates, you now find that central banks have nothing left in the arsenal. What then should we use? That brings you to your final teaser that you said. If your final teaser is similar to what I received a week to Buhari's inauguration in 2015, where one man called me and said, introduced himself, I'm a chieftain of APC. I was mandated to call you that this, what will you want Nigerians to hear President Buhari tell them as his priority when reading his inauguration address on 29th of May 2015. That was a call I received a week to that. So similar to your teaser here. And I said, well, given reality of that time, based on what I told you earlier on, that I had desire to say to Christian Amampo on CNN, I said, Buhari should prioritize the following. Number one, deal with oil theft. I said, if he's able to reduce oil theft by 50%, and that will be reduced the lower band of 400,000 barrels per day by 50%. That means you bring a saving of 200 barrels per day, 200,000 barrels per day. What will that translate into in terms of money on the table? I put that in that short memo. Then the second thing I said is, the power sector. Don't reverse the privatization of the power sector, okay? But do one thing, mandate the distribution companies to meter every consumer in Nigeria. And I gave my illustration of that. If you do that, it means consumers will pay for what they consume. And that means the income they generate will also drop significantly. But there are private investors who want to make money. So naturally, they will now look at the entire supply chain. Instead of distancing themselves from generating companies and distribution companies, the transmission companies, they will see themselves as a part of a value chain that starts from gas supply to power generation and then to power transmission before it gets to them for distribution. But what most of them have done till date is to pocket the money they generate. It doesn't go back to all those members of the value chain. That has been a problem in Nigeria. So equally, since Buhari came into office, this government, although they don't disclose this, but I found this from some work I did for some of the distribution companies. They have been funding capital projects of the electricity distribution companies. And in fact, the first time I saw that, I was hugely disappointed in those distribution companies. If federal government has been funding your capital projects, why are you coming back to tell Nigerians that government is not supporting you in any way? So, and meanwhile, they also told them and said consumers are not paying. So that was the second thing I put in that. The third one I put in that short memo was Buhari should go back to the Oron-Sanye report and adopt the major recommendations in there. And that will reduce the size of government and therefore reduce the cost of governance. So interestingly, Buhari got to the first of them only 2.5 years ago. That is on the LST recommendation of metering all consumers. Then it got to Oron-Sanye report only last year, when he now set up a committee to look at that, come up with a white paper. Okay? So now, the whole idea is that as of today, I will still say the same thing because we are back to the same position of oil theft. That means whoever is coming into this year must look at that as an important one. Number two, the power sector. Like I told Obasanjo, October 1st, 1999, I told his government there his first independence in office. I was on Channels TV as a guest. And I said, if his government will succeed, then they needed to do something about the power sector. And my reason was simply this: Nigerians, we are very hardworking and entrepreneurial. If we have sufficient power, we can turn this economy around and make it one of the best in the world in terms of productivity and performance. So my position still remains to be. So the power sector needs urgent attention. Then, of course, I thought about size of governance. 140 because we set 4 priorities. Okay. Now, the 40 I will say as of today, all right, is for the government to look at what we call the state-owned enterprises, SOEs, especially those that are revenue generating. We call them the GOEs, all right? Look at the top 20 among them in terms of capacity to generate revenue. And now implement what they have in this year's budget. Because we've always had this reference again in this year's budget, that they will retain between 10 and 15% of their revenue for their cost of collection. And then the balance of 85 to 90% should come to fiduciary account. If we do that alone, several trillions of naira will flow into fiduciary account. So all this issue of revenue expenditure nexus, voila, we are talking about, will simply evaporate.
I was just going to ask you about sale of assets. Thank you very much. Sir.
Thank you. All right.
So thank you very much. Mr. Abayomi Wuyomi, please ask the question.
Thank you very much, sir, for your presentation and mentioning the truth from the sensational economies, which the previous questionnaire has alluded to. My question, you mentioned a bit of the controversies between IMF making reference to the roadside rates and the CBN that is existing. In your perspective, what would be the fair value of exchange rates in Nigeria based on the current situations and conditions? That's number one. Number two is that during 2015-16, when we have these FS challenges, and there was a massive devaluation. By 2018, it was corrected. And now, this problem, current one has started since 2020, early 2020, and it's 3 years into it now. Where is the horizon? When can we say this problem will be resolved? And what are the things that we signals that we can begin to see to say, well, this is pointing to the fact that the problem will be resolved, like when the CBN implement the and he window policy in 2018. What are the things that needs to be done? The last question is about this JACPA, quote and unquote, working class moving significantly to the West. What would be your perspective on this? And is there anything to be worried about, or is just a fringe event that would not affect the economy? Thank you.
All right. Thank you so very much. I'm really enjoying this conversation because these are proof of the quality of people on this platform. I can't give you a fair exchange rate, so to say, because as you know, for us as treasurers, typically we watch 12, indices to form an opinion as to what is likely to happen to the exchange rate, or call it the exchange value of the currency of any country around the world. Major among them will be the demand-supply relationship, and then we now talk about interest rate differentials, inflation rate differentials, government major policies, which we derive from the key, utterances, significant utterances of key government functionaries. Then we look at the banking industry, what is happening to it, what is the state of it. Then we talk about the state of the economy. We look at capital flows in and out and all of those. So those are the kind of things we look at to form an opinion as to what will likely happen to the exchange value of a currency. That is for the point of view of a treasurer talking about what we call exchange rate economics. Right. So now if we look at all those, each of them is speaking a language that you cannot readily harmonize, so to say. So that's why I said I can't give you what you might call a fair exchange rate. But the best I can give is in the circumstances and nuances from the major contenders for the presidency, to correct the rates. And some of the presidential candidates also say that they are going to take a position against multiple exchange rates, which again, I find very funny and strange. There's no country in the world that there are no multiple exchange rates. But the way the World Bank IMF come against Nigeria on it, it's as if what we are doing in Nigeria is an aberration compared to the rest of the world. When you leave Nigeria and enter Heathrow in London, we encounter 3 different exchange rates within Heathrow. Not less than 3. If you want to convert the dollar in your hand, which is what we normally take out of Nigeria, to pound sterling, we get 3 different rates within Heathrow, even before you get out of the airport. Before you now get to blow the change, before you get to M&S and several other malls that can exchange currencies for you. So there are multiple exchange rates everywhere. So it is, a fallacy for any of them to come and say you are operating multiple exchange rates. And now, coming to the issue of 2016, when you began to raise that, I started laughing. Because that very year, I was commissioned by the central bank to do some research for them. And that was, they normally call it jurisdictional experience. Which country has had the double of the kind of crisis we're going through? That is, economy is in recession, and then you also have currency crisis combined. And in that research, I looked globally and historically. I'm going to a point that the only country that had that combined was Malaysia. And that was during the 1997-1998 East Asian crisis. So I now say, okay, what did Malaysia do? How did they get out of it? There are 4 things they did. Of course, in Nigeria, we didn't have the courage to do it. Okay? I mean, that is where the issue of political will comes in. First is the monetary authorities must buy into it. That's the starting point. And then the presidency must be willing to back them. Ladies and gentlemen, I can say this without any fear of contradiction. That was what made Soludo succeed as the governor of Central Bank of Nigeria. Because he had a president that could stand out and say, whatever you are doing, I'm behind you. Okay? So until you have a president that has the will to stand firmly behind the Central Bank governor in whatever the governor is doing, and then he can confront anybody that will challenge him, we're unlikely to get to address this issue the way it's supposed to be addressed. So what Malaysia did was basically deal with capital flows. They opened a window for any Malaysian that had, funds outside of Malaysia in a certain volume to repatriate it within 1 year. That was number one. Number two, so in which case, repatriate without any repercussion. Beyond that time, there will be repercussion because we have access to the data. Just like in Nigeria, we have access to data about people, various. There's data about everything and everyone. So when people also come out and say there's no data in Nigeria, I just laugh. What do you mean there's no data in Nigeria? We have data on everything and everyone, okay? So that was what they did. Secondly, they now also brought in capital controls, in which case, if we were to take money out of Malaysia, there was also some kind of restriction on it. But in their own case, they also indicated the window during which that restriction will be there. And so for them, it was more like, we are putting this in place and we expect people to comply. So about what did that translate into? The stock market recovered in 1998. The economy recovered in 1998. The banking system, they also did banking reform, where Soludo took the model we executed in Nigeria from. But we also bungled it because instead of having AMCON in place way back in 2004, we didn't implement AMCON until when Sanusi came here as the governor. All right. So the thing is, we copy quite all right. But when we copy, we don't paste it well. That's a problem in Nigeria. So when it comes to that, when we are to begin the I&E window, I was a guest of Channels TV live on the floor of FMDQ when we started the exchange, the very day the trading began, and how the Naira significantly depreciated. Because when it is done by the market, we call depreciation. When it is done by Central Bank, we call it devaluation. All right. So I remember warning Central Bank of Nigeria. And I remember, I won't mention his name, the director in charge of trade and exchange, that we had a serious debate on it. And I said it was a mistake by Central Bank. Now saying that we want to close that gap all at once. Just like you rightly said, the gap is wider now. Not even at the level we saw in 2016. It's much wider now, okay? So the issue is more with fundamentals, and the fundamental relates to production, basically, ladies and gentlemen. Today, we consume a lot more imports. Like I said earlier on, the latest data, 1.9 trillion naira every month is spent on imports. You see, if you get my slides, that table where I put that from, you see the table from 2013 till date, how our import figure has been going up year after year. That's where the problem is. So we are producing here, but we are not producing enough. We are consuming, yes, very little of what we produce, we are consuming more of what is imported. That's where the problem is, that relationship. So, and that was what I put before Buhari's government in 2019, I think, yes, 2019. And I said, the government needed to adopt a policy where we've seen the budget for this year, 21.9 trillion naira. That is fixed percentage of that must be spent buying things that are made in Nigeria. If I recommended 30% at the time, I said we should run that up to 80% over a 10-year period. That if we do that, we come to the scale of the US government, for example. That's it as a policy. That's what you get from the US Exim Bank. China does the same thing. So every country that has evolved, South Korea, Taiwan, India, we've reset all these economies that are growing strongly. That is what they do. India at some point said, look, if you cannot clothe ourselves, that's textile. Let's all go naked. That's how India evolved eventually as a powerhouse of textile industry globally. When it comes to automobile as well, India started from saying, if we cannot produce automobile, let's all ride bicycles. From bicycle, they went on to tricycle, from tricycle to automobiles. Now, when it comes to military vehicles, India is #1 in the world, Tata. All right. So you look at all of this, that is the way it goes. So you must be deliberate about producing and consuming what you produce. When you do that, then you started the journey of changing this particular issue. That's what Ghana did. And of course, that led to trouble for Ghana. Ghana said, instead of exporting our cocoa and now importing chocolates at 20 times the value of the cocoa we export, we'd rather produce chocolate in Ghana. And they went for that. And that became an issue that the West ganged up against Ghana to deal with them. Because Switzerland complained bitterly that we no longer get raw cocoa from Ghana to produce chocolate that we are known for. And so the only way to deal with that among the Nordic countries and then larger Europe and then bringing the rest of the world, US, into the conversation is how do we deal with Ghana? And of course, Ghana's economy is not as resilient as Nigeria's own. Ghana's economy, what the size of it is less than Lagos State in terms of GDP size. So it's easy to deal with them. They can't do to Lagos State what they did to Ghana, because Lagos State economy is bigger, let alone the whole of Nigeria. So that is the way it goes. So, but that's the direction Nigeria has opportunity. In which case, produce for your own population. That was what China did. Producing for its people and then producing for the rest of the world, which was where Japan missed it. Japan was producing for the rest of the world. All they did was to mess up Japanese yen. And that's what Japan is struggling with today. Okay? So the Japan syndrome, ladies and gentlemen, for me, I don't think that's any big deal. You resign to emigrate, fine, you open the space for another person to take. That helps me to deal with unemployment. It only means more cost for me as an employer of labor, because I will need to train a new person to the level at which we're operating. All right? So it means I will incur more cost, no doubt. That will happen, but invariably, we also will create a space for more people. But when you now look at this so-called JAPA team globally, that's when you discover that, so the data is actually showing that it's not peculiar to Nigeria. That's why I made reference to that research earlier on. The same is happening in Pakistan. The same is happening in Vietnam and many other countries. Okay? The only country that has done that systematically is China. Because each time they send their children out for education in the West, is serially arranged. You go, you finish, you come back, another batch goes. And that's part of how they develop their technology and other things that they do. Okay? So for us in Nigeria, just like, at the platform by Pastor Pojo Yemade, I was a guest, I think about 3 years ago. There was another guest, Professor Gupta from the US, he's an Indian American, who made reference to this JAPA thing. He said for him, it is nothing for Nigeria to worry about. And I agreed with him 100%. He said this happens all around the world for many countries. So, but the issue is, how do you maximize the benefit from it? That's for me the real issue. If they go, they are working, making money, yes. If they make surplus from what they are doing there, they will remit. If they remit, that has to affect supply in the market in Nigeria. All right. Even if they don't remit directly, at least whoever is doing business here that buys what they should have remitted will also use that to produce something here. Okay. So for me, when you take all the issues together, it is nothing to worry about. It just means additional cost. But we also must be challenged as well to look at our environment. What are the reasons they now prefer to go out there? Formerly, it was medical doctors, then nurses. Now it is teachers, like I mentioned earlier on. So if they keep coming here to recruit students for admission to their universities, either for first degrees or graduate courses, that means we have some quality in what our primary and secondary schools produce to be attracted to the universities over there to come and market here. But now it is even the graduates that are luring away. They say Nigeria is not a good place, but the people working in Nigeria are good enough to employ there. So we must look back at ourselves and now consider and even go out and educate our youth. Because a number of them have this misconception, misunderstanding that, oh, I'm going to get a salary of £40,000 in a year in UK. They forget that tax will take a component of that. They convert it to Naira, looking at that now compared to what they are being paid here. They forget that they'll be spending pounds sterling in UK, not Naira. And that the cost of living there is in pounds and much higher than the cost of living in Nigeria. They don't understand that. Until they get there and now begin to suffer, it's when they look back and say, I wish that I didn't leave Nigeria. So we also must deliberately begin to put such information out to them. So those, in my own view, are the ways to respond to this. That's what other countries do. Because we relate with them. For some of them, we consult for their governments. That's foreign. So we know what they do. We do some work for some European governments with respect to some sectors in Nigeria. We know what they're after. Okay? So we must be deliberate and strategic in our choices of policies and how we execute them. Thank you very much.
Thank you very much, sir. To round up the session, I want to call on Mr. Yinka Ogunubi. Mr. Yinka Ogunubi is a member of the Governing Council, Association of Corporate Treasurers of Nigeria. He is also the chairman, Education and Standards Committee of the Association of Corporate Treasurers of Nigeria. He will be taking the vote of thanks on behalf of the ex-president of the Association of Corporate Treasurers of Nigeria, Mr. Zeo Akara-Iwe. Mr. Zeo Akara-Iwe is also the chairman, Advocacy, Policy, Association of Corporate Treasurers of Nigeria. Mr. Yinka, you're welcome, sir.
Thank you, Shehu. You know, when I heard that Dr. Adedikpe was going to be taking this session, I was very excited because I was at his one of his seminars. I don't know if you remember. It took place at Sheraton Hotel in Ikeja many years ago. I was there, and you know, I've been a fan ever since. And on his newsletter, pretty sure that when you check your newsletter and check my name, you see it there. So,
Thank you.
you know, always enjoy your sessions. It's always very rich, always very impactful, full of research, full of data. I've been writing down a lot. There were lots of questions I wanted to ask myself, but many of the participants have asked it. I wanted to challenge you on the FX rate. To be honest, I felt that you know, in terms of our FX rate, we're not being realistic because most corporates, corporate treasurers, we've adjusted. You know, it's only the CBN, and there are people that still think that the Naira is at the 480. I think most businesses have adjusted, and I think this is also part of what is pushing the inflation, the cost push inflation. But you've answered it very well, and I like the balance and your mix. So this is just to say on behalf of the Association of Corporate Treasurers of Nigeria, we appreciate this time. You are a highly resourced person and of high demand, and for you to come and spend 2 hours with us, it's something that we really, really appreciate. So on behalf of the association, the governing council, the members, we want to say thank you. And, you know, in Africa, when we say thank you, it's not just thank you for now. It's also thank you for next time. because we're going to call again. And when we call again, we want you to also, you know, give us the same positive response that you gave us today. So thank you very much. We fully appreciate it. I hand over to the Executive Secretary.
Thank you for having me. I really appreciate it.
Yes, sir. And it seems the president wants to say a word or two too. You're welcome, ma'am. Okay, all right, ma'am. All right. So thank you very much. Mr. Inga has actually done that. So we'll bring in this session to a close. While we are looking forward to another one next year by the grace of God. And also we want to appreciate our members who took time to join the session. We also want to say thank you. So thank you very much, everyone. Thank you so much. We appreciate it. Thank you.
Thank you, Shehu.